Okay, welcome back, everybody, to another episode of Fintech Fridays. And we're going to kind of switch it up a little bit on this episode. Yes, we're going to talk fintech, probably going to talk a little more FinLocker than we normally do on this episode. But what I'm really excited about is my guests, Wendell and Parker Couch from AFN. Wendell is a senior regional manager at AFN, one of the most seasoned, which is code for old. We share that attribute, but Wendell's been around this business and has been extremely successful in this business for a long time, decades. We're going to get into that. And Wendell's son, Parker, is a regional branch manager for AFN, who is what I call part of the next generation, superstars in our business. And it's awesome to have you guys on. I'm super excited about this conversation. And first of all, thanks for joining me.
Thanks, Brian.
Thanks so much, Brian, for having us.
Yeah, we appreciate it.
So Parker's also, repping the horns up after the big.
That's right, hook 'em horn. Even though I graduated from University of Georgia, my wife was born and raised in Austin, went to UT, and that's where we currently live. So I am bandwagon hopping.
That's all right.
But it's fun having two programs, UGA, my alma mater, and UT, that are doing well this year.
Yeah, there's a heck of a chance that they meet up in the Final Four there. So that'll be exciting.
Yeah, it'd be a house divided if that happens.
So let's get into this. I think there's some cool threads we can pull on that kind of talk about the cross-generational aspect of mortgage origination and what worked, Wendell, for you and I, over decades, it's working today, but it works in a different flavor. And I think Parker can talk a little bit about that. But let's start with the AFN Vault. AFN Vault is the version of FinLocker that has been published for you all. So thank you all for partnering with FinLocker and publishing the AFN Vault. And maybe Wendell, let's start with you, because you and I had a long conversation here, spanning a little bit over a year, I think, on this topic, and we finally crossed the first leg of the race by getting this app published. What was it, or what is it that you saw that really resonated with you as it relates to FinLocker?
Well, FinLocker, by definition, Parker probably can't relate to this. We had lockers at school where we kept everything. If you didn't want your parents to see, you kept it in your locker at school and hope the principal didn't do a locker search, that kind of stuff. So when I first saw your product, FinLocker, and it just really addressed the four basic things that Parker could recite when he was 5 years old, because he said, he couldn't figure out what his daddy did for a living. He said, "Daddy, what do you do?" And so I asked people where they work, how much they make, who do they owe, how's their credit, and where's their money from closing coming from? And those were always exploratory questions. And I had time because it wasn't quite as fast as it is now. But now we have people who think they're educated. They call us blindly. The realtors, rightfully so, are demanding a pre-approval letter in 15 minutes, which is almost impossible. You got to be really good to make that a valid thing, because a lot of things go on. And when we do get that contract written on this letter, that a lot of times doesn't have documentation behind it, it becomes a fire drill. If you were to see Parker's welcome emails, it's imperative that I must have this now. So when I was looking at your software, if you look at origination as a rectangle, the first part of it is marketing, and the rest of it is financial analyst and guideline knowledge. But that marketing piece, where you convince a realtor to give you their paycheck and hope they can cash it in 30 days, that's kind of how that works. But we get into a fire drill after they've shown people homes, after they've done all that stuff. But if you look at the FinLocker, which identifies where you work, how much to make, who you owe, how's your credit, a loan officer that concierge person into the FinLocker's relationship move will start at a level of, yep, your credit score is 680. Yep, your cash right now in the bank's $23,000. And we have a conversation of what you wanted to afford. And here's a way to search for those properties. And by the way, your agent's right here co-branded with us if you need us. It takes the fire drill out of that, because here's what's really so true. I've got about 2.5 to 5 minutes to develop a relationship with a person on the phone. They know more than I do because they've read it on the internet. You can't tell them, oh, the house has a beautiful kitchen. I've already seen it. Well, let me tell you about the school district. What do you want to know about it? I already researched it. So all that what we did, Brian, growing up and the realtors did is gone. Now it's, do you really care enough about me to take care of me? Are you a Neiman Marcus where you come out behind the cash register and hand me the package versus Walmart where you have to scan your own stuff now and can't find anybody to help you do anything hardly? So FinLocker allows us to bypass that fire drill. It is the best thing I've ever seen, and I have liked it from the day you presented it to me almost 2 years ago. It's going to allow Parker to start at the emotional level versus the document gathering level. So that's the reason I'm such a fan of it. It's really just a great, if your audience hasn't seen it, if you're an originator, you better sign up today. I'm sorry for the ad, Brian. You can do that.
Well, I appreciate that, Wendell. Parker, I want to get your perspective as kind of that next generation originator, and maybe just start with your philosophy on how you're engaging with your prospective clients, and perhaps how there's some maybe old school lessons you've learned being as close to Wendell as you are, but then how are you bringing in kind of, the next generation tactics, including technology, into the equation?
Yeah, good question. I mean, so I started originating about, I think it was 2 years, 8 months ago. And when I started, it was on the tail end of the refi boom because rates were still low. For any purchases that I did, getting folks into house, were really, really tough because cash was king. If you could win a house with a, traditional financing offer, you were having to waive all the contingencies. And then all of a sudden, as I'm sure everyone on this call knows, you had rates go from in the threes to all of a sudden in the sevens, and then it happened incredibly quickly. And so then that really shifted the approach and strategy. So the only reason I bring that up is because I've been told since the moment I started in this career, having spent 10 years in education and educational leadership, when I started, it was, we have never seen anything like this. And then, a year later, it was, wow, we've never seen anything like this. So I still don't really know what a normal market looks like.
Good.
But I will, yeah, I will say this, that as somebody, I'm 35, so firmly a millennial, not on the young end, not really on the old end, kind of somewhere in the middle. I think that one of the big things that the mortgage industry in general is overlooking, and I say this from a spot of, when I first started, the different trainings that I went through were very focused on the technical side of originating. Now, that is really important in terms of old school lessons to learn. You do have to understand you do have to know the underwriting guidelines. You really do. You also do need to understand what a clean 1003 or loan application looks like and the minimum required documents that you should collect. So there are absolutely there's some real value still in terms of understanding the technical side of origination. That being said, I had the exact same thought over and over again when I was teaching, when I was a school director, when I was in education. There are so many things that we're being trained and asked to do that like computers can just do better. And
Yeah.
especially with open AI and BARD and all of the different machine learning that has, just flooded the market. I mean, we've got technology that folks didn't even really know about a year ago, and now they're valued at, billions and billions of dollars. I keep thinking to myself, like, wait, why are we focusing so much on things that, one, machines and algorithms can do better, but two, the only reason we're still being required to do these things that machines and algorithms can do better is because most people still don't know that machines and algorithms can do it better. So there's this real existential dread of like, all right, what's my role? What's my place in this space where most of what I'm being told and trained to do, an algorithm and machine can do better. And at the end of the day, you just have to hang your hat on the fundamental belief that no matter how advanced machine learning becomes and no matter how advanced AI becomes, that people still want to do business with people. At the end of the day, an algorithm and a machine is going to do an incredible job of synthesizing information and then telling customers, hey, it is what it is, or this is what it is. And I cannot tell you how many times I've gotten follow-up business from folks who have gotten pre-approved from some online lender, aka algorithm, and they show me their pre-approval letter. And then I just realize I'm like, oh, well, I understand why they interpreted this as X, Y, and Z. But did you know that if we can just wait 3 months, for example, I have somebody who was just really stressing about buying a house and she wants to go FHA and she's got a guaranteed raise that goes into effect January 1st. Well, there's really no place for her to put that when she's applying on this for this online lender. And so they're saying, hey, this is what you're going to get. What she didn't realize, but what I did know is that, hey, did you know that per FHA guidelines, if we have a documented raise in pay that's going to take place within 60 days of the date of the note, that we can actually use your new salary amount, which would actually increase your pre-approval amount to this, which means we really just need to kind of hang tight for 6 weeks and then we're golden.
Right.
And so that's just an example of, and she was so grateful and so excited. And so no matter what the rate is at this big box online lender, I mean, she's going to go with me because she was it was people doing business with people.
Love that.
And so that's what I think is really great about the tech that FinLocker provides and other programs like it, to where at the end of the day, like the software and the company that you've started, Brian, it can do things and calculate things more accurately and more thorough than I ever could. That being said, where my value as a loan originator will never be replaced, or if it is one day replaced, I'll probably be dead because that's when the robots will take over. Is my value is exactly like my dad was saying, is it's the interpreting of the what is, it's the communication of the what is, and also it's like putting on a therapist counselor hat, because 9 times out of 10, that's what most of my conversations are. Once we get under contract, it's not about explaining terminology. It's about reassuring and calming down and making sure that they know that this really scary, overwhelming thing is actually a really good thing.
So Brian, I would add one thing to that. So I did more loans at McDonald's and kitchen tables, and you did too. But when I got in the person's environment, I could comment on their beautiful children's pictures, on their beautiful plastic covered sofa they're going to put in their new house, all that kind of stuff. My rapport was built during the application process. As I congratulated them on saving money, as I talked to them about their pay raise, as I said, oh, your credit's amazing. And I had a chance as I was originating to develop scripted rapport building techniques, which, you did too. Any good originator does that. But now when someone applies online, and I would tell a lot of originators, don't bypass the human interaction after someone applies online. Just think of that as the 20 minutes you save getting information, and don't just dump it over to an assistant. You've got to woo that customer into confidence. And I've listened to Parker do it better than I've ever done it. I was more like, I need this, this, and this, and let's close your loan. I was an orthopedic surgeon. He's kind of like a family practitioner kind of thing. But people are scared. They're uneducated. They don't understand that, they can cut one Starbucks coffee out every other day and afford, more house than they think they can. One thing that Parker's group, we have a focus group of millennials, and they hit me between the eyes. They're all 34 and 35. They said, we've been told we can't buy a house.
Yeah.
Someone's
over and
told
over
us
again.
it's not for us. That this ship's not for us. We can't sail on this ship. And Parker's story is, we did his first FHA loan in Memphis 8 or 10 years ago. His mother-in-law gave the commission for the down payment. I paid all the closing costs as a lender credit. And I don't think Parker to this day has ever put money into a house, and he owns almost 4 homes now, just because of that start. His generational wealth is way ahead of most 35-year-olds because someone took the time to teach him. And the reason I like FinLocker, it's going to put me in the teaching mode instead of the information crisis mode. And it's so valuable. I'm not teaching technical stuff. I just say, get it somebody online, let my operation folks scrub it. I want to teach you how to connect with people.
I love that. And that if I know both of you are following my posts on LinkedIn, and I lean in heavily on education as kind of the top of the spear, right? The tip of the spear. So Parker, I want to kind of go down that path with your background as an educator. How important is educating broadly? And I'll make the assumption that you're fairly active on, some of the social channels, right? And how are you leaning into your background as an educator and leveraging social to kind of build your audience and build your followers that over time likely will be either a source of referrals or even direct clients? How does that work for you?
Yeah, maybe an unorthodox answer to that. I think a lot of time when it comes to what we're doing as originators, social media, there's a lot of effort in saying, hey, if you do this, this, and this, it will generate leads. I think that is possible, but there's a tipping, research shows this, algorithms on YouTube and TikTok and Facebook and Instagram, they reward consistency of content posting. And if you're just very consistent, then the algorithm will continue to promote you. So there is absolutely a world where you can break through the noise and actually generate a bunch of leads through social media, but it takes a ton of work.
Yeah.
And there's a tipping point that takes sometimes 6 months, sometimes a year, sometimes 2 years, and sometimes you never even get there. So instead, what I did is I actually used social media as a kind of a glorified hub of different educational resources. So if you go to my YouTube page, these videos are almost entirely focused on the nitty-gritty process of buying a home and why buying a home is even worth it. And these videos are not designed to actually generate leads. What they're meant to do is just to establish my authority as somebody that my customer can trust. So how that looks is if somebody's filling out an application for a loan and I'm sending my, hey, congratulations, you're pre-approved email, which is a really exciting email to get. I then give them homework, and I've got a playlist that I made on my YouTube channel. It's about 15 videos. Each video is less than 5 minutes long. And it is, some would say, in a too much painstaking detail, but it is in painstaking detail, step by step, what the mortgage process is. So that's how I've leaned into social media, and it's worked for me as like a platform for me to really educate my borrowers, be more efficient with my time. And then it also makes the applications that I do get, the borrowers that I do get, it makes the pull through rate a lot higher. It makes them stickier, quote unquote, because by the time they're excited about being pre-approved, they then have spent an hour of their time learning a ton about a process that was foreign to them. And I was the expert that was in front of them, actually being the person who, taught them that process.
I love that. That is, I think about, and this Wendell goes back to the things we would have done, as younger originators. What Parker just described is not scalable if you're doing that for 20, 30, 40 people in a given month, right? There's only so much of you to go around. But now by leveraging, these tools, by the way, tools that the younger generation goes to first, that's where they're going to learn anyway.
Mm-hmm.
And so I would suspect over time, Parker, what's going to happen is the YouTube channel, as an example, using it as a resource after you've engaged a consumer, over time, and it probably already happens organically, it will start to produce, organic engagement and leads, because
Right.
the algorithm is going to reward the engagement that you're getting there. But the point is, and this all ties together with kind of what we've open the conversation with, which when I think about one of the values of FinLocker to an originator and to a lender, it really does help scale your engagement with your prospects and customers, right? And doing it in a consistent manner with tools that are highly engaging for a consumer, whether it's them checking their credit score, monitoring changes to their credit, or even for those that already own a home, just keeping tabs on the value of their property, and having the ability to understand how to optimize available equity, as an example. Those are all scalable tools for a loan officer who starts with this concept of being a resource, a trusted resource. And so super excited about the partnership, because you guys clearly have the vision that starts with education and then leads with ongoing support and engagement. We definitely share that vision together.
So Brian, we've been working with realtors and doing a coming soon type things. One realtor told me, he says, I have 1,100 leads I will give you tomorrow. And because, see, the thing about, I don't even want to call them leads. We got caught up in buying whispers and rumors.
Yeah.
And without putting any flesh in, just what Parker was talking about, that social media presentation. I teach originators, if you can cause documentation pain and get the customer's documents, they don't want to go through that pain again.
Right.
It is a painful experience. I purchased my house 4 years ago, and I ended up with 2 trash bags with stuff in my office looking for one daggone tax return that I couldn't find. If I would have had FinLocker, I would just hit transmit, I've been done. And whoever solves that documentation pain for a customer, because at the end of the day, everybody, rates are rates. Yep. There's no magic pill. Loan officers jumping companies and moving, and they think it's not what customers buy. Customers buy a committed person. Parker does something very smart. He pulls up Google and says, "Here are the rates." I said, "What does that do for you, Parker?" He said, "Dad, they don't care what rates are. They want them to just know they're not getting ripped off by me. That's what they're cared about. Then they know I care, and then we take them through the process of how that works." So to get that information in front, see, our whole approach to FinLocker, AFN Ball is going to be a concierge. We're going to take it a step further for you. My call team is going to go in and help people complete FinLocker. That's going to be our 1003, basically. Or a 1003. I just dated myself, didn't I? Mark said, "What's a 1003? I don't know." So I think it's just so critical, because people they don't understand. One thing Parker leads with is something that Barry Habib does, is an appreciation calculator. He congratulates a person for their equity growth.
Yep.
And it's just, we got to quit selling the sterile mortgage. We got to sell people that we're here to really, really be a part of their lives and create generational wealth, because it's incredible what a home can do for you.
I love it. Well, Wendell, Parker, that's a great kind of note to end on. We're here to help build generational wealth, starting with your first time home, right? It's not just a great story. It truly emulates the American dream. And the FinLocker team is super proud and excited to partner with AFN and partner with specifically your team, Wendell, and Parker with you as well, to really bring a differentiated level of service and tools to your customer base. So we thank you for the partnership. I thank you for sharing your perspectives today on Fintech Fridays. And folks, if you're not following Parker and Wendell, you need to go check them out on LinkedIn. Check out Parker's YouTube channel. When I publish this, I'll put some links out there so everyone can kind of keep tabs. I appreciate you guys, and thanks again for joining me on today's episode of Fintech Fridays.
Brian,
thanks so much, Brian. It's been a pleasure.